Canal Plus has made a mandatory buyout offer for Multichoice. The French media company is offering R125 per share in cash. This values the potential purchase at about R35 billion and values the DSTV owner at around R55 billion. The offer price represents a premium of 66% to Multichoice closing price on the 1st of February, which was the stock's last trading day before Canal Plus delivered its indicative offer. Multichoice's board has appointed Standard Bank as its advisor on the deal. The Forestry, Fisheries and Environment Minister has upheld Sasol's appeal lodged in 2023 against the government's decision to reject its proposed approach to pollution measurement at its Secunda plant. Last year, South Africa's National Air Quality Officer rejected Sasol's request to measure sulfur dioxide emissions from its Secunda boiler plant by rate or load of emission rather than the concentration of particles. This prompted the firm to launch an appeal on the grounds that the measurement approach it suggested presented a better solution for the company and the community surrounding the plant. The minister has now sided with Sasol in its thinking. Sirius Real Estate has completed 4 previously announced acquisitions in Germany and the UK totaling over €100 million. The acquisitions have been made using the proceeds of the firm's capital raise, which took place in November. In total, the purchases will add more than 140,000 square meters of primarily industrial space to the group's business space portfolio and just under 72,000 square meters of predominantly industrial space to its German portfolio. Separately, Sirius also announced that it has completed the disposal of a light industrial asset in Stoke-on-Trent in the UK for £3 million, which was deemed non-core to the business. Goldway Capital Investments has received acceptances for over 83% of MC Mining's shares, and so the deal has now become unconditional. The firm says it will extend its offer to shareholders for 10 business days. The development will result in MC Mining being delisted from the JSE. South Africa's plastics and industrial chemical sector has come under scrutiny. That's as the Competition Commission's launched a probe into the sector. Amid concerns about the concentration and lack of productivity in the polymers market, this follows the release of a polymer inquiry draft terms of reference that states that although South Africa has low production costs for polymers, the plastic sector in the country does not appear to have gained any advantage from this. Further afield, Chinese property developer Shimao Group is facing a liquidation petition filed by China Construction Bank in Hong Kong over an outstanding financial obligation of more than $200 million. Here's more detail in this package report.
Only a few years ago, it was boasting about building a luxury hotel in a disused quarry. Now Shimao Group is the latest big Chinese property developer to face a survival battle. On Monday, the company said it faced a liquidation petition filed by China Construction Bank. That marks a rare move by a state-owned lender to take action against a developer. Legal cases against other troubled firms such as Evergrande were started by overseas creditors. Shimao's Hong Kong-listed shares tumbled as much as 12% in early trades on Monday. That helped drive the city's benchmark Hang Seng index around 1% lower. The developer said it would vigorously oppose the lawsuit and press on with restructuring efforts. China's property sector has been in crisis since 2021, after regulators started cracking down on the massive debts built up by some firms. A string of defaults has ensued, leading to liquidation petitions at firms including Evergrande and Country Garden. Property sales and investment have also tumbled, raising alarm in Beijing, with the sector at one time accounting for around a quarter of China's economy. Shimao missed payments on one bond in 2022, leaving its entire $11.7 billion in offshore debt in default. Sources say creditors have already flagged opposition to its restructuring plan, concerned by the potential losses they could face.
And employers of airport security staff in Germany and the Verdi union have reached a preliminary agreement on a wage deal facilitated by independent mediators to resolve their prolonged dispute. Let's take a look at this report for more.
Long-running strikes at German airports could soon come to an end. Employers of airport security staff in Germany and the leading Verdi union have agreed in principle to a wage deal. Both parties made the announcement Monday. It comes after they brought in independent mediators to break their long-running dispute. The BDLS Employers Association and the union have until noon on Tuesday to accept or reject the arbitration recommendation. Verdi will hold off from calling for strikes until then. In a statement, BDLS said mediators recommended wage hikes of between 13.1% and 15.1% within 15 months for some 25,000 airport security workers. Europe's biggest economy has been hit by a series of disruptive and costly stoppages in recent months. It's hurt air and rail travel as workers demand higher wages to cope with the impact of inflation. Strikes brought 11 airports across Germany to a standstill in February and also massively affected air traffic in early and mid-March.